Alrighty guys, what is going up? Welcome back to another episode. In today's video, we are going to be looking at the S&P 500. Given today, we have sold off roughly 1% and a lot of people are freaking out stating the market is going to crash. It feels like we are making this video like every other day, but we're going to be pretty much breaking down what's going on with the stock market. Why did we get some sell-off today? Was this a expected sell-off, or is this going to be starting the next crash or correction? Are we due for a crash or a correction? So I hope you guys enjoy it, and overall I hope you guys get something of value out of this video, because that's the main idea with the channel, with the video, is I'm trying to give you guys as much value as I possibly can. And if you guys want to learn more about investing in the stock market, check out my course, and you guys can use promo code dividends to get 50% off. So I'll put a link to that down below. But let's break down the S&P 500. So right now, we're just looking at ticker symbol SPY, and this is just an S&P 500 ETF. So it pretty much just tracks the S&P 500, and the top holdings in this, the top three: Apple, Microsoft, and Amazon. So you guys can see we had a little bit of sell-off today. Looking at the RSI, it was overvalued, about a month ago, a couple weeks ago. And we did get a little bit of sell-off and just some consolidation. Nothing much, nothing crazy. And then today, you guys can see we did get a pretty big dip down in the market. So looking at the RSI, it's only at about a 60. So given that, I think we're probably due for a little more sell-off back down to about 415 to 411. I think that's a very expected return. What should you do if that happens? Buy some. Average, dollar cost average this all day long. Use the volatility of the S&P 500, use the sell-off of the S&P 500, and just average into your shares. I think anytime, a ETF or the general market sells off, it brings such a good opportunity to buy more. But right now, the S&P 500 is so heavily weighted by the top three holdings. Right out of the get-go, you're pretty much weighted, 15 or, 12% of your portfolio is just in three stocks in the S&P 500. The very first one is Apple, AAPL. And what do we have today? Sell-off. This really went from around 130 all the way down to about 126. We'll probably get a little more sell-off back down to about 124. Hopefully find some support here. If not, probably back down to about 118. Hopefully we get a little more sell-off. It's at a 42 on the RSI. So probably right at about 25 to 23 is where we'll see some sort of buying pressure enter. That would be really, really nice. Okay, so yes, we had a sell-off of 2.5% with Apple. Now, the next one, Microsoft, MSFT. Whoops. The next one here, Microsoft. Geez, I can't even type. MSFT here, guys. Look, sell off. Okay, this is selling off back down to some more support here at around 245. So I think this would bring more opportunity. Hop in. This is down 2% itself. So really, the top two right now have sold off more than 2% in value. So let's look at Amazon, AMZN here. Boom, sell off of 3%. So when people say the general market or the S&P 500 got crazy amount of sell off, you have to look at the holdings in it. The top three holdings, the average sell off sold off, 2.5%. I think that is absolutely crazy. So when people say the general market sells off, look at the individual holdings to understand the general market right now. We're getting a little bit of sell-off from some tech, which is probably a little bit of expected. But overall, I think there is so much opportunity right now with the S&P 500. I think that we're on the verge pretty much of like the roaring 20s, very similar to the 1918 when we had, a lot of lockdowns and a lot of things going on. Then the 1920s were the roaring 20s. So I think that could possibly happen in 2020 and, go all the way for the next 10 years or so. I'm really, really excited to see where that goes. Looking at Tesla here today, TSLA, it looks like we did get more sell-off of 6.4%. And the S&P 500 does make up around 1.5%. So just selling off. It's expected for things to sell off. Everything does not go up in value every single day. When something sells off like Tesla over 6%, dollar cost average it. Probably will sell off a little more here, probably back down to about 608, 615, if not 600. I think dollar cost average everything that you guys believe in. Do your own research. You guys will just be fine. Not to mention, over the past 90 years, the S&P 500 has an annual return rate of around 9.8%, and that's going all the way back to the Great Depression, ups and downs, all the volatility through all the Great Depressions, through all the, the recessions and bull and bear markets, 9.8%. So if you have a long-term outlook on it, you guys will be just fine. Don't worry about the day-to-day prices. But yeah, are we due for a little correction? Possibly. That's just when the market sells off 10%. It happens. It happens like once every 3 years or so. But a general crash is when the market sells off more than 20%. And that does average anywhere from, 4 to 8 years. And, the past crash was 11 years since the other one. So I think that was probably a little expected. But overall, a lot of opportunity in the market. Nothing to be too worried about if you guys just have a long-term outlook. So I hope you guys enjoyed it. And overall, this was just my general opinion on the market right now. So we'll see you later. Remember to stay happy, guys. Stay positive and stay safe out there. Take care, everyone.